Here's just 3 of the titles from this week's news recap. It's not a crash in the Canadian real estate market. The worst may be over for the Canadian real estate market. And borrowers are not showing signs of distress. Well, this is going to be a fun news recap. Hey everybody, welcome back to Bald Prairie Real Estate. It's another Friday. It's time to get you updated on what happened in the news this week. My name is Matthew, I'm a real estate agent from Regina. That's my trusted assistant, Matilda. Let's get you a terrible joke. Jump into the news. Why did the ghost take the elevator? He wanted to lift his spirits. If you have a great joke I can use in a future episode, put it in the comments below. Leave this video a like, it helps me out. Hit that subscribe button if you haven't already. And leave comments. I love chatting with you guys in that comment section. First article up here, the government of Ontario continues to take action on their plan to see 1.5 million homes getting built. They're going to remove land, or should I say, allow builders to build in the Greenbelt. They're going to try to get 50,000 homes built. They're going to take away some of the land and allow it to be used to be built on and then add it back somewhere else. So I'm really happy to see the government of Ontario continue to commit to seeing more homes being built in and around that GTA where homes are badly needed because of the shortage there. I just hope they find a good solution here to make sure that that protected land that everybody can get to enjoy isn't taken away and just built on over top. So I'm hoping they find a good acceptable solution for this, but seeing more homes built, this is awesome. This next article here is kind of reminiscent of the Great Depression era building competition in New York City between the Chrysler Building and the Empire State Building for who could build the tallest building in the city. Well, in Toronto, there's a competition going on at that massive One Yonge complex where they're building huge high-rises. Right now, they're planning to have these buildings at 95 and 80 stories respectively, but they have just put in an application to increase that to 105 stories and 92 stories, making that first building the first building in Canada to cross over 100 stories. This is pretty cool. I actually am kind of excited to see if this gets approved. It'd be kind of neat to say that this is the first building in Canada over 100 stories. Canada's largest non-bank lender, First National, has a report out, and there's a lot of really interesting stats here that you want to dig through. They're talking about delinquency rates, and so that is when you are 90 days or more behind on your mortgage payments. Couple of interesting stats out of this. The first one is that in their adjustable rate mortgage holders, there's actually a lower delinquency rate than the rest of their portfolio combined. So even though the Bank of Canada has been increasing rates and those adjustable rates have gone up, they're not seeing more borrowers getting behind in the payments that have seen those increases than the rest of the portfolio that's not seeing those increases. So that was really interesting. And as an overall whole, their delinquency rates are at all-time lows, including this last quarter's report. So they're not seeing an increase in delinquency rates now. That's an important stat. If you're wanting to see if we're seeing an increase in foreclosures, delinquency rates will go up first. And of course, as people are struggling to cope with higher payments or just the overall cost of life as inflation has gone up, you will see delinquency rates start to rise if they're unable to keep up with those payments. As of right now, and again, this is the very early stages of higher interest rates and high inflation, but right now, First National is not seeing that within their portfolio. In my November Canadian real estate market update, which if you haven't watched it, I'll put a link to that in the description, and one of them fancy pop-up cards should be popping up. You can check it out there. I said that I thought the Canadian real estate market was starting to show some early signs of stabilizing. And I took a lot of heat for saying that, but this article right here is from RBC's chief economist, where they're saying the exact same things. They're looking at all the different reports being published by the real estate boards and saying that they're seeing some stability in the market, and specifically in places like Toronto, where now we've seen 4 months in a row, price declines have shrunk each and every single month. We're not through this yet, but they're saying that the worst of the correction may be behind us. And they're also saying that they're not seeing any signs of distress for sellings going on right now. So it's really interesting that I've been talking for a couple of months. This is now RBC's chief economist, not Matthew Pfeifer, the local Regina real estate agent, talking about how there might be some stability coming to the Canadian real estate market now. This last article here is an interview with CIBC's chief economist, Benjamin Tal. I strongly recommend you actually watch the whole interview. It's really good, a lot of good information about the economy as a whole, so you can check that out. I'll put the link to that in the description below. But I want to read the title of the article. Softening housing market is not a crash. This is Benjamin Tal's own words saying that the softening real estate market we see in Canada is not a Canadian real estate market crash, and that this is healthy to see prices sliding back down, kind of coming down from the crazy highs that we saw. Prices were up 40+% on a national-wide basis. So saying this is a good thing. They're still saying that the Bank of Canada is going to, he thinks in his mind, have the peak interest rate at 4.25%. Right now, at the time of recording, we're obviously 3.75%. And they're still forecasting they will see the prices bottom out as we get into the spring market. And that's when they're expecting to start seeing prices start working their way back up. So again, CIBC's chief economist, really smart guy, lots of good information in that interview. Check that one out. That's a wrap for this week. Thanks for watching. Again, if you like this video and haven't liked it already, please do that for me. Hit the subscribe button if you love learning about real estate. Right here is my most recent Canadian real estate market update. And some of the stuff I talked about there is stuff that I talked about in these different news articles. So check that out as well. As always, guys, thanks very much for watching.